Welcome to Pirls Stock Market Commentary for market week ending Friday, March 7th, 2014. Market breadth. With this past week's market advance, our bull-bear point and figure ratio rose from 1.91 to 2.21, advancing into strongly bullish territory. The total count of securities in bullish or bearish patterns rose 5% to 2,215. The count of bearish stocks decreased 5%, while the count of stocks in bullish patterns increased 10%. The Sand to Pearls P&F Market Breadth Summary Chart shows us a market now 4 consecutive weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the image is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking on Membership, and clicking Sign Up. For those who are interested, a free 2-week trial subscription is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 123 points for the 15th rise in 30 weeks. At a positive 467.25 points, it has risen above the September 2012 high, the October 2013 high, and the January 2014 high. It continues below the other 4 of the 8 tops above plus 100, and above all 6 bottoms below minus 100 in the last 35 months. Market Gauge Volume Analysis. In this week's volume analysis, the Russell 2000 ended in distribution mode. In the last 2 weeks, it had 4 accumulation days and 5 distribution days. Of the other indexes, both the S&P 500 deposit receipts and the Diamonds Trust ended in accumulation mode. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Russell 2000 ended in accumulation mode. Momentum. At Tuesday, 2/18 close, the CCI 20 daily had 6 days above zero for a change of trend. Now at 99.30, it continues outside the plus or minus 50 range for a valid zero line reject entry signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 55 weeks ago, while the daily CCI 20 began a Woody's uptrend 2 weeks ago. The CCI 20 weekly continued above plus 100, although slightly downward from the zero line reject long entry point 2 weeks ago. We will continue to follow this trade simulation in next week's commentary. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and 4 of the bottom 5 are negative. Bullish, gold and silver continues in the bottom 5. Banks and brokers have entered the top 5. S&P retail continues in the top 5. Computer hardware has left the bottom 5. Oil services has left the top 5. Bearish, disk drives has left the top 5 and entered the bottom 5. Focus this week from ZeroHedge.com, Seth Klarman on Born Bulls, Bitcoin, and the Truman Show market. With 40% of the portfolio in cash and having returned $4 billion to clients at year-end, Seth Klarman's Baupost group has drawn the line in the sand as they reflect on the diminished opportunities in the so-called Truman Show market we see today. In the face of mixed economic data and at a critical inflection point in Federal Reserve policy, Klarman notes The stock market, heading into 2014, resembles a Rorschach test. What investors see in the inkblots says considerably more about them than it does about the market. From born bulls to worry genes, and from Bitcoin to flash mob speculation, there is a growing gap between the financial markets and the real economy, and the overall picture is one of growing risk and inadequate potential return almost everywhere one looks. As every Truman under Bernanke's dome knows, the environment is phony. Thank you for viewing this week's Santu Pirls Stock Market Commentary. We hope that you're having a pleasant weekend, that you have a great week coming up, and we wish you true success.